Good news for the U.S. economy, which grew at a 3% annual rate in the second quarter. That was higher than expected and a rebound from a 0.5% decline in the first quarter. Economists point to stronger consumer spending and a correction in trade imbalances. And the Federal Reserve again decided not to cut interest rates as it keeps watching the number on inflation. The board voted to hold rates in the 4.25% to 4.5% range, despite pressure from the president to lower them. Well, while the economy appears strong, some fear a threat is on the horizon. They believe the huge federal debt is pushing the U.S. towards default, all because Washington can't stop spending. CBN's Dale Hurd reports.
Think of the U.S. economy as a person who looks healthy, but on the inside is carrying a serious disease that could kill them. Treasury Secretary Scott Bessent puts it this way.
Our fiscal situation is a 350-pound, 2-pack-a-day smoker on the ICU table.
The federal debt is at $37 trillion and climbing. That's over $300,000 per taxpayer. The U.S. now spends more on interest than on national defense, almost $1 trillion. In 10 years, interest payments alone could absorb 30% of government revenues.
The U.S. federal debt is on an unsustainable path.
The Penn-Wharton budget model estimates the U.S. has less than 20 years to tackle the debt problem or face default. Yet for decades, Washington's approach has been to kick the can down the road and put off cutting spending. And because the economy keeps buzzing along, it can seem as if the huge government debt isn't a big deal. But some warn that a reckoning is coming, and it could be bad. Chris Edwards is an economist at the Cato Institute.
It's an extremely serious and dangerous situation we're in right now. The federal government has already borrowed $30 trillion. And if the government does nothing over the next few years, the accountants in Washington think that the $30 trillion will rise to $50 trillion.
While the White House claims the recently passed One Big Beautiful Bill will reduce the debt, the Tax Foundation says Trump's spending package will add up to $3 trillion to the debt over the next decade. Daniel Bunn is president and CEO.
There's still a significant hit to the deficit and long-term debt, and that's something that I think lawmakers could have made better choices to have this be more fiscally sustainable.
The impact of the huge federal debt has been minimized because the world keeps financing it by buying U.S. Treasury notes. And that's why some, like Big Short investor Steven Eisman, call the federal debt a non-issue.
If there was a real alternative to Treasuries, then all of this stuff about the deficit is something that I would pay attention to. But as long as there's no alternative, there's nothing to talk about.
The largest holders of U.S. Treasuries are Japan and China. Should China in a future conflict with the U.S. dump its treasuries, the dollar would be worth less and inflation would spike. Even without such an event, the federal debt is making Americans poorer and could cost them as much as $14,000 a year in lost income by 2054.
We are mortgaging our children's future. It's wrong. It's immoral. It has to stop.
We are writing checks we cannot cash, and our children are going to pay the price.
While almost everyone in Washington agrees the federal debt must be cut, finding the political will to do it is another matter. Dale Hurd, CBN News.
Thanks, Dale. Gordon, I remember your dad would often talk about the federal debt and profligate spending here in the Beltway.
Well, it goes back for generations. My grandfather was a chairman of the Senate Banking Committee, and he was absolutely a fiscal hawk and wanting to make sure that there were budget surpluses. And this is back in the 1950s, 1960s. And whenever government spending got out of control, he would absolutely use everything in his power on the Senate floor to make sure that wouldn't happen. But here we are, and we've been warning about this. I remember warning personally that once it hit 10 trillion, it was out of control, and you were going to get into a debt spiral. The problem with it is just not manageable. And when you have debt that exceeds the entire national product of the United States on a yearly basis, I mean, how in the world do you ever plan to pay it off? And you can't. And that interest continues to be a problem. And in order to entice people to buy more of your debt, you have to raise your interest rates. It's absolutely incredible that people that should know the cliff we're getting ready to go over and just say, well, okay, let's just continue to add to it. Now, where ultimately does this stop? Well, it stops with you and me, the voters. As long as we're looking for what's called pork barrel politics, where our members of Congress are rewarded in how much federal money they can bring back to their district, senators rewarded how much federal money they can bring back to the state, everybody clamoring for a spot at the feeding trough, it's up to us to say no. You're putting too much at risk. You're putting our currency at risk. You're putting our children and our grandchildren at risk. You're putting our nation at risk. This is where democracies go and die. And you don't have to look very far. Look at the very beginning of democracy in the Greek city-states. As soon as the polis, the population, figured out they could vote themselves the treasury, well, then the next thing that happened is that city-state would be bankrupt, and then tyranny would come in. They would be looking for some kind of savior to get them out of the economic mess. Now, what happened to Germany about 100 years ago? Really horrible war, World War I. Afterwards, reparations demanded by the Allied powers. And Germany went bankrupt. And their currency became worthless. And then they elected a dictator. Are we on that same path? And if we are, and I would submit we are, why don't we wake up to it and say, enough? Now, if you want extra incentive, the prediction is the Social Security Fund is going to be bankrupt in my lifetime, like 13 years. Now, that should be a wake-up call for every baby boomer that we're in trouble in what used to be considered sacred and a sacred obligation. Under the current law, if the trust fund doesn't have enough money from new workers paying into it, there are automatic cuts to the monthly payment that Social Security makes. You talk about social upheaval and incredible poverty for people who no longer can work. That's a cliff I don't want to go over. Let's wake up to it. Let's vote our pocketbook and our children's pocketbook and say enough of this spending. We have to rein it in. We have to get a federal budget that's balanced. And I wish we had passed that amendment to require it. But we need it, and we need it now, and we need it very quickly.